Snipers, you have to see what's happening to the Bitcoin price right now, as so much has progressed over the last few weeks with Silicon Valley Bank and Signature Bank pretty much being bailed out by the US government. We have the most accurate cryptocurrency technical analysis in the world. And notice how on our charts, Bitcoin finding support at an extremely important level here at 19,800, not even going $1 below this major support, no full body candles below this major support. And now as I record this video, Bitcoin is facing our major resistance at 24,300. It's not a coincidence that Bitcoin is still inside of this range that we've been monitoring here on the Snipers channel for several months now. We have the most accurate cryptocurrency technical analysis to the exact dollar. For those in our Discord group, I sent out a buy signal on Bitcoin as soon as it came down below 20,000 US dollars. And then now within 48 hours, we've seen over 20% gains just in that signal alone when Bitcoin started to move up, as we started to see investors move into safe haven assets, of course, Bitcoin being one of them, but also across the board, look at gold showing a correlation to Bitcoin. We're seeing US dollars move into gold and into Bitcoin. And then notice how Bitcoin against the S&P 500 now decoupling away from the equity markets to form new yearly highs, snipers. This is an extremely important update. Everything actually inversely correlated to the US dollar actually showing weakness right now, selling off after the US government announced that it was going to bail out these federal banks, Silicon Valley Bank being the 16th largest bank in the world. What does this mean for the overall market? Bitcoin is the solution to the banking system, right? If we look at what happened to Silicon Valley Bank, this is the second largest banking catastrophe since what we saw in 2008 with Washington Mutual. There's a lot of talk right now that investors are moving their money into safe haven assets. And now that they can't trust banks, what are they going to be looking towards in terms of a safe haven asset? Well, of course, Bitcoin being the #1 asset in the world. We've been covering it here on the Snipers channel for over 5 years now. Let's talk about what's happening on the charts, because this is the technicals that matter right now. If we're going to see a major move for Bitcoin, what we're monitoring, snipers, is a breach above 24,300 with decisive daily candles. Why is this important? Because if we see a full daily candle close above 24,300 with bullish candle symmetry, we've yet to see that. We've only faced this level as a resistance. If we see full daily candles close with bullish symmetry above 24,300, guess what happens here for Bitcoin? It opens up the door to a massive move towards the $35,000 level. That is about 40% more upside for Bitcoin from where it's currently sitting at. This is an extremely important move. And guess what? If we look at Bitcoin CME charts, notice how all Bitcoin did coming down here was fill this gap that was left down here around the start of this year. And now with this move to the upside, we have another gap open. So we're going to always address the bears and the bulls on this channel. The bears might say, well, the S&P 500 isn't really showing strength right now. It's not forming new yearly highs. So is Bitcoin really justified to see a massive move to the upside? Or is this just a short squeeze? Because we did see shorts start to come in when Bitcoin initially crossed below 20,000. I think it was the first time since December that we saw futures contract actually flip to the short side. And then immediately we saw a massive pump to the upside as we started to see capital flow into Bitcoin as we got that announcement from the Feds that they were going to bail out the banks. Of course, why does Bitcoin benefit from that? Well, we are losing more and more faith in our financial system when the US government comes in and just bails out the banks, right? And so I think that if we want to address the bearish case, snipers, what we'll say is this. Number one is we do now have a CME gap down below, pretty much in the same area as where our previous CME gap was at, right there at that $20,000 level. So pretty much 20,000, we have a CME gap. The exact number, because we have the most accurate cryptocurrency technical analysis on the internet, is, let's see here, 20,330 is that CME gap, up to 21,110. And so the bearish case would say maybe we come down to fill the CME gap. I'll talk about the early signs of that in just a second. The other bearish case is the fact that if you look at Bitcoin right now in terms of market structure, we are still facing resistance as I record this video. If we're not able to get above 24,300, that could be a potential sign of concern. And of course, what the bears will argue is that the S&P 500 still doesn't look too good. You can see it's still falling out of this market structure it's still pretty much selling off. So is there justification for Bitcoin to move further up to form new yearly highs when the S&P 500 is not performing that well? Well, that's what the bears are pretty much going to say. And then I will also mention this. The Ethereum to Bitcoin chart is not actually performing too well as well. So Ethereum against Bitcoin is a good leading indicator of whether or not we're seeing strength in the cryptocurrency market. And when the Ethereum to Bitcoin pairing is not performing well, we have to assume that what if we're starting to see altcoins move into Bitcoin? That's why Bitcoin is moving up to potentially hedge against further downside, because let's say we see an overall drop across the board in equity markets and in Bitcoin and other altcoins. Bitcoin, of course, will see less of a drop percentage-wise than other altcoins because it has a larger market cap. And so a lot of times in a bear market, what you'll see is when Bitcoin does pump to the upside, but the Ethereum to Bitcoin chart being a leading indicator to altcoins doesn't follow and also see strength, sometimes that's an early sign and an early warning, an early indicator that maybe this pump isn't necessarily a pump showing strength and new liquidity coming to the market, rather just liquidity moving amongst different assets. And so that's something that the bears will potentially start to fight. And then the second most important aspect of technical analysis other than market structure is going to be volume. So let's look at the volume. I'll actually say this on the 6-hour institutional time frame. We are seeing some pretty good volume. Look at this extremely large amount of volume that came in here with our previous 6-hour candle to come and test 24,300. This is institutional buy volume right here. And you can see this is actually the most amount of buy volume that we've seen inside of this range since July of 2022 when we first breached below the 2018 previous all-time high of 20,000 US dollars. You can see this is the most amount of volume that we've seen since then. And so volume is actually pretty good here on the 6-hour chart, in my opinion. And so we'll have to start monitoring the shorter time frames for the more micro time frame traders. What we'll look at here is the 15-minute, we'll go even into the 5-minute. What you'll see is we're still seeing very large spurs of buyers come in, and we are not seeing sellers equate to the amount of buyers. And so I would not say that the bears have control yet of the price. Even though we are facing a major resistance, there's still a very strong chance that we could see another major push to the upside, potentially towards the $27,000 level. If we were to move into this range, then 24,300 could potentially become a support level. That could happen while you're watching this video, snipers. But I will say this is a very critical time for Bitcoin. I did not leave you guys behind. Remember, we've been monitoring this range for quite some time. And so Bitcoin has literally been playing ping pong inside of our major range here. I've had these numbers on the chart for a very long time. So you guys know, snipers, we have the most accurate cryptocurrency technical analysis on the internet. I did send out a buy signal as soon as Bitcoin breached below 20,000. And of course, that has already resulted in massive profits. We have to continue to monitor the price Bitcoin inside of the range with a resistance of 24,300 and a support of 19,800. This is the range Bitcoin is in. We have to continue monitoring this range. And then I will lastly say this, if we were to look at any further upside targets, we will look at market structure and take the base of this falling wedge to the actual top of the falling wedge to look at where we could potentially land here with a breakout. And that's why the $27,000 level is of interest here for me, because of this market structure. If we were to see continuation above 24,300, I wouldn't be surprised for Bitcoin to get towards that $27,000 level. And then, of course, what would happen at that point is we would want to hold 24,300 as a resistance, or I'm sorry, as a support. If we hold that as a support, then we could potentially see further upside here for Bitcoin. But you know, the bears are going to say that the S&P 500 is not justifying Bitcoin moving further up. But once again, the fundamentals are just as important as the technicals, right? So technicals are 10%, fundamentals are another 10%. And then market psychology is the 80% when it comes to trading and when it comes to price action and price movements in any asset. And so we want to continue monitoring the markets and see what happens here. And of course, we could look at some revolving parts to get some hints as to where things could go. Bitcoin against SPY is actually decoupling right now, forming new yearly highs. This is a very bullish puzzle piece here. We're seeing a lot of strength here with Bitcoin against SPY. I'll quickly cover Ethereum to the US dollar pair. You can see very similar to Bitcoin. coming down to its major support, which was the 2018 previous all-time high at 1440, and then now back above it with a resistance of 1760. If we can get above 1760, it opens up the door to 2,000 US dollars here for the Ethereum to US dollar pairing. But of course, it is showing a little bit of weakness against Bitcoin based on the Ethereum to Bitcoin pairing. The Satoshi pairing is always a lot more important. Now, I will mention Bitcoin dominance here, forming new yearly highs right now. This is something that we'll continue to monitor, because remember, snipers, what we want to see here based on the 200-week moving average is for Bitcoin dominance to get towards that 200-week moving average, for us to have a confirmation that the bottom is already in, because we know in previous bear market cycles, the bottom was already in when Bitcoin dominance reached its 200-week moving average. By the time it was there, the bottom was way behind us. And so we want to see Bitcoin dominance move up. We are seeing Bitcoin dominance move up, which means that this move could certainly be altcoins flowing into Bitcoin and maybe new liquidity coming to the market. Maybe it's not just altcoins moving into Bitcoin, but it's also liquidity from banks coming into Bitcoin as a hedge against the banking system. And that's certainly a possibility here. So Bitcoin dominance moving up is also a very positive sign. Across the board here, let's look at what's happening. The VIX is starting to spike up. So we're starting to see the VIX show us a lot of volatility here. We were expecting this. We knew the VIX was approaching this 5-year support level. And so now that the VIX is spiking up, that could potentially lead to more volatility in the markets. And that's to the upside and to the downside. So I think this week is going to be extremely important for the equity markets and for Bitcoin. I'll mention Japan right now down over 2%. That's not a good puzzle piece. Japan being one of the largest equity markets outside of the US, that's down over 2% right now. And then across the board, we'll have to continue to monitor even the Euro 100 falling down right here to its 100-day moving average, down over 2%. Those are not good puzzle pieces. So let's just keep note of that things are extremely volatile right now and extremely uncertain. So it's going to be extremely important to continue monitoring what's happening here. The DXY, notice how the US dollar sitting at its 50-day moving average right now as a support level. If we breach below this 50-day moving average, that could be a confirmation of further weakness here for the US dollar. Let's look at the moving averages on Bitcoin. You can see Bitcoin now above all of its significant moving averages on the daily chart, the 50, the 100, and the 200 period. And then if we go into the weekly chart, you can see we're still below the 200-week moving average. You can say that we rejected the 200-week moving average, but now we're squeezing ourselves between the 50-week and 200-week moving average. So do we really have a breakout for Bitcoin right now? I wouldn't say so. I would just say that Bitcoin is playing games inside of a range that's been in for the last few months. Now we're just playing that game at the top of this range, at the resistance of this range. And so do we have a full confirmation of a breakout just yet? Most likely not. I wouldn't say that we do. We need to get above that 200-week moving average and above that $24,300 level to really have a strong confirmation of a breakout for Bitcoin. Right now, we're just playing at the top of the range. Anything can happen, especially with the volatility starting to increase, traditional markets decoupling from Bitcoin. A lot is happening right now. Would it be wise to take a short position here? I know some of the micro time frame traders would ask the question, well, if we're at a resistance, do we take a short position? I don't personally like to short Bitcoin, but what I will say is if you do have a short position open, that stop loss set right here at the 200-week moving average would be your best bet, and 24,300 or as close to 24,300 as you can get for that short position entry is probably the wisest decision. And then we could potentially see a rejection here again. But for the second test, this is really actually the third test here, I wouldn't be so confident in taking a short here because we could certainly see a massive liquidity crunch and a short squeeze here for Bitcoin. Interestingly enough, I also want to mention the double top. Not a lot of people are talking about this, but notice how on the 16th of February, the candle high was 25,250. And then when we came back to test this demand zone, we got rejected on the 21st of February with a candle high of 25,250. Literally to the exact dollar, to the exact penny, we couldn't break 24,250. That's some food for thought. That's a textbook double top. And so another piece of information that I want you guys to take home with you is that if we do not breach above 24,250, that's the exact number, then we do not, 25,250, that exact number, 25,250. If we do not breach above 25,250, then we are still underneath the double top. So that market structure is extremely important to keep in mind. Maybe if you are taking a short position, I would say 25,250 should be your stop loss, because that would invalidate the double top. And then I certainly would expect a ton of liquidity to flow in to clear out short positions. And so that's some food for thought there for those micro time frame traders. 25,250, extremely important because of this double top here that we are still underneath. And so very, very important stuff here, snipers. Very important technicals to keep in mind. And then we'll quickly wrap up and look at some other potential indicators here while we conclude this video. I would say across the board, altcoins are not necessarily doing too good with this move. It's really just Bitcoin and gold seeing the benefits of what's happening now with the uncertainty with banking and financial institutions. For those that ask, what are my thoughts about what the US government is doing, intervening into this situation, I would say that it is what it is. I think that, the world that we live in today is a lot different than it was a few decades ago. And so, of course, it would have been detrimental for all of the startups that had funds locked into, let's say, Silicon Valley Bank, for example, to not have access to those funds, especially to pay payroll and things of that nature. It could really set back innovation. And so is it the best thing for the economy to allow these institutions that have uninsured funds in these deposit accounts to get access to them through the US government? I think that, whether you want to consider that a bailout or not, it probably is the best case for the companies to have that assurance that things are safe there. But I think overall, it strengthens the thesis that we need something like Bitcoin to hedge against these sort of institutional risks. And so, that's why we've been covering Bitcoin here on the Snipers channel for the last 5 years. That's why I'm a believer of Bitcoin, and I think it's the #1 asset in the world. So with that being said, snipers, I think we'll wrap up this video. As you guys know, I'm going to get a video out to you guys when it matters the most. This was obviously a very volatile week. And of course, Monday came. It was time for me to get this video out to you guys. I hope you enjoyed this video. Smash the like button for the YouTube algorithm if you support this content. And I'll see you guys on the Discord. Congratulations for those that took our long position on the Discord. I sent that out as soon as Bitcoin came below 20,000. That was the mark I was waiting for, and I was expecting some sort of volatility from that area. Of course, we got that volatility to the upside, over 20% in less than 48 hours. So with that, thank you all, snipers, for tuning into the channel today. And until next time, snipers out.